All you really need is 3 candles. What I'll introduce you today is how to find daily bias, a swing trading strategy, as well as a scalping strategy, all using this 3 candle pattern. This is a video for both beginners and advanced traders as I explain everything in details. Make sure to hit the like button and subscribe so we share this knowledge to more people. Let's get into it. The 3 candle pattern. So let's say you need or you're struggling with finding the daily bias. You could use this. You're going to be using 3 candles to find your either daily bias, weekly bias, or you could also use it for scalping. So let's say you're using the 1 minute time frame and you want to find a bias, you could still use this, but it's always about the higher time frame related to the lower time frame. Now you could use this to find the bias. You could also use it to get an entry, right? Or you could also use it to find a point of interest. A point of interest is known as a zone where you could look for entries. So you could execute inside of that zone to find the highest probability entries. Now, how is that possible? How can we find an entry, also a POI at the same time? We're going to be using 2 phases. So 3 candle pattern could be used to find the POI, and then inside of the POI, we could also look for the entry on the lower time frame. Right, so it's a 2 phases, or you could look at this also in a 3 phases: bias on a higher time frame, POI in a medium time frame or intermediate time frame, and then an entry on a lower time frame. So this is going to be a 3 phases. So there are multiple ways to take advantage of this 3 candle pattern, and there are multiple ways to use it. But at the end of this video, you're gonna know that actually those 3 candles can do a lot for you. We're going to go in much details. We're going to go in how to find the bias, how to find the POI, and then examples on how to execute entries and higher time frame, lower time frame, and the relationship between them. And hopefully the 3 candle pattern is all you need, besides all of the fundamentals that we learned about: liquidity, POIs, different PD arrays, timing, market structure, and all of those important things that we already mentioned on the other videos. Now we got to understand, what is the 3 candle pattern? What is the reality of it? What is inside of that 3 candle pattern in a lower time frame, or looking inside of each candle of that 3 candle pattern? What are you going to see inside is a power of 3, or AMD, which stands for accumulation, manipulation, distribution. So what is power of 3? It's the same, right? AMD or PO3 are the same thing. Power of 3, what does it mean? It means how powerful those 3 phases in the price action, how you can actually see those 3 phases in almost any piece of price action. So what we see here is AMD, accumulation. The first one is accumulation. Usually it's a consolidation, right? And if you know those stuff, you can actually skip the video to the 3 candle pattern. But those things you need to understand in order to understand the 3 candle pattern as it is in one time frame, right? This is usually on a lower time frame, how you can see it inside. So we have the consolidation or the range, that's your accumulation, and then we have the manipulation, right? So we can see that we actually have a deviation below the range, so to come lower. And then displacement, break-in structure, it tells me that, okay, most likely we already have this manipulation, for example, 1 standard deviation below this range, and then we got a break-in structure, then a mitigation, and we got a displacement. So at this point we know that we're starting the distribution. So accumulation, manipulation, distribution, that's how you see it in a lower time frame, right? That's how we see it on a lower time frame. In a high time frame, it could be much different. It has different variants that most likely you never thought about. So that's what I'm gonna also cover in this, because a lot of people think that AMD or PO3 happens in a very specific way, but it could happen in different ways that a lot of people don't know about, and that's the intention of this video. So you see, we could look at power of 3 in 1 candle. For example, looking at the daily candle, this is a bearish candle, right? A red candle, it means that it opened here and closes here because it's bearish. Now it opened here, we had the manipulation above the opening price, and usually above the midnight open price, right? So we had already a manipulation above the opening price, then we started to come lower, and what we had here is price going lower, a lot of ranges here until we close here. But before that, we also created the low and then we close here. So we could have a power of 3 in one singular candle on a daily, the same thing on a 4 hours. So you could use this daily candle as a bias, right? Just one candle by itself. We could also use this as a 4 hour. So let's say if you're using the daily, you could use 1 hour time frame with it, right? On a lower time frame. 4 hour, you could use 15-minute time frame and use this 4 hour as a bias for that 15-minute, way of trading. You could use 2 candles. So power of 3 could be 2 candles. What happened here is what? We had a bullish candle. We were going up. And then what we had here is liquidity sweep closing lower. So what happened here is accumulation, right? And then we had manipulation here and we had distribution here. So it was not in one single candle, but it was in multiple candles. And then we closed lower. So the power of 3, even though it's 3, right? It's a power of 3 phases, but it could happen in one candle. It could happen in 2 candles. And also, if we look at it from another perspective, right? We had this bullish candle, and then this is my accumulation. We had manipulation, but we had no distribution, right? Because what happened here is no displacement below, the same as this candle. So we had what I call an indecisive candle, right? We swept here. So this is the manipulation, and then we had the distribution, and most likely this is your breaker structure on another time frame. So 3 candles. So you see how power of 3, even though it's 3 phases, but it could happen in 1 candle, in 2 candles, and in 3 candles. When you see this from this perspective in different time frames, you're gonna have the real understanding of the AMD or the power of 3. And our focus for the day is gonna be mostly on this one, but we're gonna also discover the other variants, which could be also a 2 candle, right? But mainly I want to see it in 3 candles because it gives me more confirmation. It tells me that there is a structure on the market that is happening. When there is a clear structure in the market, it's more convincing to get involved. So as I said, the 3 candle pattern is an AMD, and we're going to be focusing on that power of 3. We're going to be focusing on those 3 candles. So this is what I want to see. 3 candles, AMD. How does that look on the low time frame? The same thing as we discussed at the beginning of the video. AMD, we have accumulation, most likely refers to this candle, which is my accumulation candle, creating liquidity here, lows, right? And then manipulation here, mostly happening by the second candle. So you see 3 phases, 3 candles. So we had manipulation here, creating a high here, and then the 3rd candle, which is the distribution, or somewhere in here in between, we have price going up, right? So this is how we see it. This is how we see it. We could have a breaker structure inside of this. So in short, 3 candle pattern is nothing but what? A 3 candle AMD. And that's our focus for today. So our first candle is going to be an accumulation candle. And most of the time, this is going to be a small candle, right? And it could be a big candle because a range could be a big or small. It doesn't matter, right? And if we have a small range, then the move after most likely is not going to be that big. But if we have a big range, then we're going to be targeting, for example, if we took the low of the range, then we're going to aim for the high of the range. It means that the move is going to be bigger, right? Bigger than the smaller range. So it could be a small or big, but I want it to be very close to a POI. That's how I prefer it. Or it could be also inside of a POI. But then, for example, we could have it inside of a fair value gap, right? Just touching here, but it did not go to the overlapping of a breaker block inside of the fair value gap. That's an example, right? And you want it to be opposite color. What does that mean? So if we have a bullish 3 candle pattern, which I'm looking for this V shape, right? In a line chart, for example, or even in candles, right? I want to see 1 candle, 2, 3. That's still a V shape, right? So I want the first candle, which is the accumulation, to be the opposite color of the real move. So if it's a bullish move, I want to see most likely the first candle to be a bearish candle going lower, right? Now the manipulation is going to be sweeping the previous candle high or low. So you see this candle accumulation, I want to be the manipulation to sweep that higher low of the candle, and I want it to have a rejection wick. So I want to see it sweeping and then closing above, for example, in a bullish scenario. Usually it's a small candle and indecisive, especially in a 3-candle pattern. If we have 2 phases or 2 candle pattern, for example, it's going to be different. But what I'm referring to here is a 3-candle pattern. So I want it to be a small candle, indecisive. It has a rejection wick and it sweeps the candle higher low, right? The previous candle. Now the 3 candle is going to be the distribution, but what I'm going to call it here is the engulfing. So we're going to call it engulfing candle. What is engulfing? In simple words, you know, there are a lot of people who like to complicate stuff, but engulfing means CISD, change in state delivery. I want this change in state delivery to engulf the manipulation candle. So you see, it's phase 1, phase 2, and phase 3. It's going like this, you know, accumulation. This manipulation is manipulating the accumulation, right? And this engulfing is engulfing the manipulation. So CISD engulfing the manipulation candle, and then the color equals the direction. I said opposite color here, but this engulfing, when we get a big bullish candle, it means the bias is to go to the upside. So your direction. So the color equals the direction. Now there are different types of engulfing also. We could engulf only the manipulation, or we could engulf the manipulation and the accumulation, and each one has its advantage and disadvantages, and that's what we're going to be discussing in details. That's how we focus. We focus on details because those details are going to prevent questions from being questioned, and it's going to clear the doubts even before they, you know, come to your mind. Now the variants of the 3-candle pattern, the first one is the one that we, you know, discussed a lot of the times. It's the accumulation, manipulation, distribution. This is the one where we sweep and then close above, right? Now the other one is 3-candle pattern, or, you know, I would say AMD, but in 2 candles, which is 1 accumulation candle and 1 manipulation and distribution candle. So we have 1 phase here and 2 phases here, equaling to 3 phases, but in 2 candles. So what happened here is a sweep and then closing above, equaling change of state delivery. So this also could be, you know, you could deal with it the same as a 3-candle pattern. A third variant is this one. We have accumulation, an indecisive candle. It's a bullish candle. Yeah, we closed above the opening price, which means that it's a bullish, but then we did not close above. So I could look at this as there is no manipulation. So all of those 2 candles are 1 phase, which is accumulation. So this is, you know, the first 2 candles are accumulation. And what happened in this candle? Because we have power of 3, we have 3 phases. Those 2 candles have 1 phase, just an accumulation. This phase has manipulation, sweeping both candles, and then at the same time closing above. So manipulation and then change of state delivery, which equals to what? Engulfing. So 1 phase here in those 2 candles and 2 phases in this 3rd candle. So this equals to 3-candle pattern also, but it doesn't mean each candle has, you know, a different phase. That's how we look at it. Okay. Now the same with everything that we taught in this channel, and the same thing that we apply with any setup, any strategy, any way of trading. We only execute our lower time frame entries when we are in either a higher time frame POI or the same time frame POI. We only validate the 3-candle pattern, which is this one right here, only when price is inside of a point of interest, either fair value gap, order block, breaker block, etc., any types of PD arrays. When we have a liquidity sweep, so let's say this 3-candle pattern was happening at another fractal low, or when we have SMT. So when we have SMT, we also validate this 3-candle pattern. Now at the beginning of the video, we mentioned that 3-candle pattern can be used to find the daily bias, right? And not just daily bias, any bias on any time frame. But let's say, for example, daily time frame. Daily time frame is going to tell you your daily bias because you're trying to catch the move of the day, right? You know, the move of the daily candle. But what we see here is that 3-candle pattern could actually help you with that. How? We see how we're starting to go up. This is Euro USD on the daily time frame. we started to go up, we're coming lower, and what we see here is what? Sweep of liquidity, closing above the manipulation. What does this look like? Even though we did not close above the accumulation candle, but accumulation candle could be used as a liquidity level, right? You see, we reached that. It means that, okay, we are reaching a very significant level of liquidity. But how does this look like? When we have this 3 candle or the 3rd candle, how does it look like? It's a confirmation that we're going higher. And you see, we started going higher, higher, higher. There is no low put in. And the low put in is the 3 candle pattern to the lower side. So the V shape, right? I don't see any valid pullback until I see this one. We started to come lower. So you see, closing below, sweeping liquidity from one here, right? And then another bearish candle, sweeping liquidity here, closing up. We did not close above the manipulation, right? Which is this one until here. Now this is kind of a complicated 3 candle pattern, but I just want you to see how it's still effective when finding the daily bias. But look at this. This is very simple one, literally a 3 candle. So what we had here is price coming lower, going up, right? Now we have a pullback. This is also a 3 candle pattern, but we did not close. We only, I mean, it was not a closure below, so you could forget about this one. Now you see, we started going up. We had this accumulation, very small one. We swept above. We had this manipulation, and we had this distribution or engulfing. This engulfing confirms that the bias is to the lower side. And if it's a very big candle like this, most likely we're creating a fair value gap, and we could have traded of that fair value gap either from the first mitigation or from the continuation purge, which I explained previously. Now we started coming lower, and you see we were bearish. There was not a single 3 candle pattern that could give me a direction. What happened here is what? Candle, bearish one into an order block. We had a sweep and we had a closure above. Could have traded this one, but it was not a big range because we already see we closed above this and we had this liquidity level, which is taken into this order block. This one, we had bullish candle, which is my accumulation, manipulation here. And then what happened? Distribution confers to me a bearish bias, right? We started coming lower until when we had bearish candle, bearish, and then a bullish, which tells me that this is a very nice 3 candle pattern. We have accumulation, manipulation, engulfing. This is 3 candle pattern. Then price retest the order block, started going higher. Another 3 candle pattern, and this is very clean because it was in an obvious fair value gap. You see 1 candle, accumulation, very, first mitigation of fair value gap. We have manipulation, and actually those 2 candles are accumulation, and this is the last variance that I explained. This is very strong. So what happened here, this could be used as your external liquidity. What happened here is a sweep and then CISD in the same time, which tells me that, okay, we have 1 phase here and 2 phases in 1 candle. We started going up, and you see we have 3 candle pattern here. This one did not work because we already took the main liquidity level into this rejection block and we started going higher. So you should have looked at the 3 candle pattern also with the PD arrays. So 2 things, aligning with each other, that's how you confirm your bias. So when it comes to the 3 candle pattern, there are 2 main, different ways of entering. So you could have used any of those, and, it depends on the level of experience you have. I mean, if you have less experience, I would say go with this one. It's going to lead to lower reward to risk. But if you have more experience, you're going to go with this one, higher reward to risk, but you're going to miss the trade sometimes, and it's going to be a bit harder if you are not experienced to enter of those and knowing where to enter from. And also sometimes you're going to get stopped out and then price is going to go up. You're going to need to have that level of experience in order to go with the second one. Now, the first one is, you see, 3 candle pattern, 3 candle pattern, the same ones. The first one is an entry after the engulfing. So you see, we have the accumulation, manipulation, engulfing. At the engulfing, at the closure of it, if there is a level of liquidity that is still not taken and it's the main one, we could have targeted that one. So entry here, targeting that one. Stop loss goes below, the engulfing or the swing low of the 3 candle pattern, right? And target the other liquidity level. Now the other one is a lower time frame entry below or above the opening price. We got to understand the opening price. So we have, again, accumulation, manipulation, engulfing. At this engulfing, because this candle is very strong, there is a big possibility that price is going to retrace a bit, maybe to 50% of it, maybe to a fair value gap inside of it. That's why you need to go to lower time frame, right? And this is your opening price of the next candle. So a lot of people ask question. Sometime you mention opening price and sometime you mention closing price. I got used to this, as this is, yes, this is a closing price of this candle. Yes, but why do I say opening price? Opening price is the opening price of the next candle. So not this candle, it's the next candle. This is the level. You know it before it happens, right? Before the next candle opens, you know that this is the opening price when this closes. So usually if it's going to be bullish, this is opening price, price is going to go lower, maybe to mitigate a fair value gap on a lower time frame, then go up, right? So what you could do is go to a lower time frame, find an entry. So you see a lower time frame entry between here and here. As soon as you see the mitigation and the respect, you could have executed. So maybe entering here and then targeting a swing high here, for example. So those are the two types of entering, executing, one on the same time frame, another one on a lower time frame. Each one has its pros and cons, so you go with the one that fits you and fits your personality the most. Now, high and low probability, we have a lower probability, which is just price. And when I say lower probability, it doesn't mean that it doesn't work. It means it's a lower probability compared to this one. But even this one has some disadvantages, especially if this candle is too big and already took a major, drawn liquidity. But this one is still higher probability compared to this one, but both you can trade. Okay, so the lower probability refers to one that is just engulfing the manipulation candle. So just manipulation candle engulfing above. The higher probability one, which most likely is a big change in state delivery, and most likely we have a big move after. Go back to your chart and see the difference between the two, and you're gonna see that this one actually leads to a bigger move after, while this one maybe it's a move to the upside, taking a liquidity here and started coming lower. But while this one, price is gonna go up, maybe come to 50% of it, go up again. And this one, or the specific 3 candle pattern type, right, this is gonna lead to much bigger movements, and you're gonna see that in your chart. You can go back this and see. Now we're gonna go over some examples on the trading view. We're gonna go over different ones using different types of entries. It's gonna be on Euro USD. I'll try to go over some other pairs because not everyone use Euro USD, but most of you guys do. So yeah, let's go over the examples. So now we're gonna be starting with using the 3 candle pattern as a swing strategy, right? So swing means we are dealing with higher time frames, waiting for trades to play out, over some days or maybe weeks. So let's use the 4-hour because I think it's a time frame that is in the middle, and we're going to be using the 3 candle pattern in order to execute, right, and trade the swing trades. Now let's take a look, or let's start from here. You see, so this is the current price action in Euro USD. Let's start from somewhere in here, for example. So what I see here, and I'm just gonna go briefly, just using the 3 candle pattern, not even with the lower time frame entry. So this is the CISD entry, right? Just when I see the 3 candle pattern happening, I would enter, and we're gonna go over, the losing trades and the winnings. So I think I'm gonna start from here. We have 2 fair value gaps are being inversed by this candle, and we have a fair value gap here, and price actually started coming lower. But before this, what I see, I just want to mention something that I see very clearly, right? One is here with this fair value gap. I can see that we have 3 candle pattern, right? Or let's forget about this one and maybe focus on this. We see that we have a rejection block, and what happened is price coming back to it aggressively and then pushing higher. So we could have executed on this accumulation, manipulation, and distribution, entering on this. Also another rejection block right here, And what we had is price actually coming back to that rejection block. What happened here? Take a look at this. Slightly a touch inside of that rejection block, closing up here. So this closure actually is not bullish at all. It doesn't give me that sense of bullishness. But then the other one, and the next day, Tuesday, Wednesday, what we had, maybe a high impact news, sweeping below, closing above. This is just by itself is a 3 candle pattern, and it's a valid one. So could have executed on this stop loss, because this is, you know, a swing low now, stop loss below the low, targeting, let's say 3 to 1, right? Or maybe 2 to 1, or maybe 2 to 5 to 1. Let's say 2 to 1 for the sake of this video. So 2 to 1 right here, first entry. Now you see we created another fair value gap. We started to come in lower. Now take a look at this. We had this price sweeping below, but then we had no closure above. We started coming lower. This is a 3 candle pattern, but is it happening at a major liquidity level, or a major PD array, or a major POI? Not really. It was happening inside of this wick, yes, but it's not very valid. You could have gotten some profits until here, but it's not valid to me. The valid is this move to the upside now. So we came to this fair value gap, first candle, sweeping, right? And then another sweep with a closure above, which gives me what? This 3 candle pattern here. Yes, accumulation, 2 candles accumulating inside of the fair value gap. We had manipulation and CISD at the same candle. This is another entry. So this is one entry here, and it has a big stop loss, but you could have, maybe put it somewhere in here, or at the 50% of the wick. Let's say we're going to put it here and then target 2 to 1, for example, right? And that's a 2 to 1. We got it. Now we started going up. I'm focusing mostly on this price action. You could have executed one if you were thinking about this POI here. Could have, we reached this overlapping, but I don't see a clear 3 candle pattern, right? We started coming lower, and we took this liquidity level inside of the fair value gap. You see the respect here inside of the fair value gap right here, and we closed above. That's another 3 candle pattern here. Could have entered here, stop loss below the low, and targeting 2 to 1. Now the same thing happening where after this move to the upside. So let's say you entered here. If you trust a trade, you could have stacked more trades on the same direction. So for example, you can see that we started going up, creating first fair value gap, second fair value gap, and in this fair value gap right here, we had an overlapping. Price actually did not reach that overlapping, but we had an inverse fair value gap right here. Which is right here, and price came back to it, right? So that's an inverse fair value gap. Price came back to it, and we have this balanced price range, small one right here. So this is the one. This is the balanced price range. What happened here is price, and even if we don't look at this, what happened here, if we just zoom in, did we have actually a 3 candle pattern? We had the sweep of a low, not a closure above. We push lower. We have the sweep. We don't close above. Came back again to the inverse. What happened here is 1 candle, 2, 3, going up and engulfing all those previous candles. So that's a 3 candle entry. Stop loss goes below the swing low, and then targeting what? 2 to 1 again. So that's a 2 to 1, and it was achieved. Now we have another fair value gap here, but the thing with this is that you want to follow the order flow. So you see, bullish order flow, you don't want to look, very far away to the left and look at, a reversal out of nowhere. No, you want to follow the order flow. And that's what I mentioned in my video suggested now, that in order to be successful, you want to look for continuation against reversals, right? So continuation is better than reversals. And you really want to trust this, because a lot of people became successful just by, fixing this small mistake, which leads to a lot of losses. So do we have a 3 candle pattern here? We have one, but that's, not that clear. You have a sweep here, not a closure above. This is a closure above. So you could have also entered on this, but this is not very clear. So I just want to take the ones that are clear to you guys. Now we started to come lower. We go up. So did we? Yeah. So we're taking a liquidity level from here, creating a fair value gap. Maybe that's, a temporary move to the lower side. So you see, we have fair value gap. We're sweeping liquidity. We had no 3 candle pattern, nothing. This one is a 3 candle pattern. So you could have executed here, or as a risky entry, there is this tab of, if you trust the fair value gap and if it's fully filled and we close below what? This body low. That's another entry where you could have executed. Stop loss goes above the fair value gap, targeting 2 to 1. That's one type of entry, which is a risky one. Another one could be, the real closure below, which is this one. And then stop loss goes above, and then also targeting 2 to 1. And you see both of those entries. Actually, this one did not go to 2 to 1, was very close to it, and unfortunately reverses. So if you were not in front of the PC, then most likely this is gonna go to either break even or a loss. Now what happened after is we started coming lower. This is liquidity level, which when taken, right, this is with the main order flow, in taken, we got this bullish candle. That's another entry. Stop loss goes below. That's another stop loss, right? But we had another push to the lower side into the fair value gap right here. That's another one. And I'm going over every fair value gaps, but for the people who are experienced, they're gonna know where price is gonna go to, right? That's what we do every day in the Discord. We know where price is going to. You see what happened here is price coming to this fair value gap, the extreme one, and we had engulfing. So we had accumulation, manipulation, and engulfing at the same candle. As an entry goes to 2 to 1 easily. And then what happened after is another fair value gap here, getting a sweep, manipulation, distribution here. We got a closure above, so that's another entry. Now remember that we could have had what? Accumulation, manipulation, distribution, or engulfing. This is another trade. It goes 2 to 1, right here. So 2 to 1 in one candle, literally one candle. You enter, you get your profits. We started going up, and whatever happening here is happening. But for example, we're looking at this FVG here, or let's say to the left, we have this order block. We got 3 candle pattern at this order block. That's an entry here, for example. Stop loss goes above, and 2R, that's achieved. Another one would be where, if you're looking at the order flow to the lower side, we got this fair value gap, because we hit a weekly level here in Euro USD, and weekly levels are very strong. So we had this FVD, but it was just a miss here, right? Because it's always choppy before NFP. So when we have news that are 2 days after, for example, or it's an NFP week, we wait for the price to reveal what's going to happen, and then we're going to execute after. This is how you use the 3 candle pattern as a swing strategy. We're going to go now on a lower time frame and show you how you can execute this on a lower time frame and using the opening price to get a better entry. Now there are different ways to trade the lower time frame, right? So what we traded before when it comes to the swing is just waiting for the 3 candle pattern to happen and enter immediately. The thing that we're going to do with the 15 minute is a little bit different. So you could have go to 15 minutes and trade it every, should be in kill zone, right? Every swing high, every 3 candle pattern, but it's not going to give you those 2R or 3R or 4R, right? Sometime you don't have a big range to trade, and especially that Euro USD has been ranging a lot lately. So you're not going to have those big trades. So what you can do, first of all, only focus on market makers model. So the move of internal to external and external to internal, that's one thing. But how we're going to be executing the trades is this. We're going to focus on 4-hour level, right? And then maybe if it's too big, refine it on 1 hour. And then we're going to go to 15 minutes, wait for price to go to that 15-minute level, right? And wait for a swing high or 3 candle pattern to be created here. And then we're going to be marking the opening price. You could have entered immediately, using the 3 candle pattern, because now you're trusting that you are inside of a big range. Another thing you could have done, mark the opening price, enter above the opening price on a lower time frame, in this case 1 minute or 3 minutes or 2 minutes, and then it's gonna go lower. So this is our execution. Now let me go over some examples, right? I'm gonna go with a little bit smaller fair value gaps just to make it easier for us to refine, right? Because the bigger it is, the harder it's gonna be to trade. You're gonna look for overlappings. But the sake of this video, you use any tabs of analysis, you use any way of trading you want to use. You could also look for the 3 candle pattern to happen and then execute after it on a time frame. But the one I'm gonna show you today is what? For example, 4-hour fair value gap we have here. 4-hour fair value gap also we have here. Let's look at those fair value gaps on 1 hour, for example, if we can refine them more, right? So those fair value gaps are with the order flow. See, order flow to the upside, and then we get the flip with the fair value gap. That's a high probability one. So we have the real fair value gap here. We have the real fair value gap here. So we define the fair value gap from 4-hour to 1 hour. Now we go to 15 minutes and we're just gonna look for a creation of a 3 candle pattern in those fair value gaps, right? So we go here. We see the first one is a bullish scenario, for example, and this one is what? Fair value gap, liquidity level, sweep. And let's look at this. In the London kill zone, we sweep that level inside of the fair value gap, and we had accumulation, manipulation, and then engulfing. But this is a body engulf. So if you don't trust this, it engulfed the body of the candle, and it's significantly a big one. So you could have trusted this one, or what you could have done is wait for another 3 candle pattern, which is what we had here is what? Accumulation, manipulation of this candle here, candle low, and then engulfing. So that's the opening price of this candle. We mark it like this, or we keep an eye at this, right? And then we go to 1 minute time frame and we look for an entry within this range right here. See, this is the range that I want to look for an entry. So let's take a look at this on the low time frame, on the 1 minute time frame. So what we had is what? Opening price here of the next candle, price respecting this fair value gap, but price could actually go and sweep this liquidity level, or if it's in a hurry, it's gonna come to this fair value gap and start to go up. What I'm gonna look for is a 3 candle pattern. That's one way of trading. It's not the only way, right? So you see price coming lower. I don't see, this is manipulation. I want to see engulfing, right? And we started to go up. This is another manipulation. I want to see an engulfing. Okay, manipulation. So in this case, that's accumulation, manipulation, engulfing, but not a big engulfing. So I want to look for, or I want to wait for another one. So this could be an accumulation, manipulation, and then engulfing. So yeah, so that's the 3 candle pattern we have, right? Which is accumulation, manipulation, and then engulfing. That's your entry, stop loss at the low, and then targeting, for example, 2 to 1, right? Or you could have traded, or you could have, aimed for 3 to 1 in this case. So you see, started going up and hitting that take profit. Now, you could have done what? Go to 15 minutes again and follow the order. So you see this one went to, targeting the Asian high, that's a 4 to 1, and it kept going higher, right? So another opportunity was here with the order flow, another fair value gap. You could have looked for this 15-minute fair value gap with 1 minute 3 candle pattern. That's another one. But we have another 4-hour here. We want to see if we have inside of the, in this 4-hour fair value gap, and we refine it to what? 1 hour. Again, that's one way of trading it. Feel free to follow your way, because I believe daily bias could be found by 3 candle pattern, entry, as well as POI. Put it all together and create your own trading plan, right? And mix this with the market makers model, with everything that I mentioned and everything that I covered in my channel. Just put some effort and you're not gonna regret it. So you see, we have this 1 hour fair value gap and 4-hour fair value gap, right? On the 15 minutes, I want to see if price is gonna go back to that fair value gap. And actually, what happened here is what? We went to that fair value gap above the Asian high, deviation above, come in lower, 3 candle pattern. What happened here is what? Accumulation candle, 1, manipulation, 2, engulfing, 3 candle pattern. You see an inverse V shape, right? So V shape is like this. This is an inverse V shape. We started coming lower. What we can mark here is the opening price of this candle, and then go to either 1 minute time frame, 2 minute. Let's see 2 minutes. What do we have? Yeah, so 2 minutes. We have fair value gap here. 1 minute. We also have some fair value gaps and a liquidity level here. Also a liquidity level here, but this is too far. So playing here, we can see that we started to go up into the fair value gap on 2 minutes. That's a clear fair value gap. So I could mark it on the 2 minutes because it's more significant on the 2 minutes, right? Back to the 1 minute. I want to look for what? 3 candle pattern here. And it was about to happen, but it didn't, right? And that's what I see here. So what I see, even though it's not a 3 candle pattern, but here it is. So this is an accumulation, manipulation, because we sweep the high of the previous candle right here, sweep, and then engulfing. So that's an entry. Stop loss goes above the swing high. And here, what you could have done here is what? Target 2 to 1, or you could go to 15-minute time frame and look for a level of liquidity that, or a point of interest. For example, this 15-minute POI or Asian session low or whatever, right? We're gonna go back to 1 minute time frame and see how far this one goes. So let's say we're targeting 2.5 to 1. You see, starting going lower, taking the 2.5, coming back to the entry, and then started to come lower. Let's do 5 minutes and see where this one goes to. And you could have followed the order flow here again, because it's reacting off what? A 4-hour level. So now this tells me that this is a start of a new market maker's model, going lower, lower, lower to this one or the 4-hour level that we have, right? So this is how we see it. And you see back above and started coming lower. And another time, if we go back to 15 minutes, what we have here is what? Based on my 2 trades a day, what we had is price sweeping the Asian high, breaking structure, which tells me what? That the bias for the day is bearish. And what we have here is this bearish move and fair value gaps here with the overlapping New York starts. I want to see a 3 candle pattern in the New York, and it looks to me that we have one here. So we got this fair value gap, liquidity level, taken, no 3 candle pattern, accumulation, manipulation. That's an engulfing, but only with a body, and that's a real engulfing, right? So you could have marked this opening price, go to 2 minutes or 3 minutes and check what's happening. So you see fair value gaps here respected, 1 minute time frame. We got some fair value gaps here. Playing the price action, we see that, okay, so we went back to this fair value gap with the overlapping. Yeah, so there was no 3 candle pattern here. Accumulation, manipulation, and then distribution. That's one here, right? Stop loss goes not exactly above the swing high. Gonna put it a little bit above because we have another fair value gap, and I really prefer to put it above. But if price decided to go up here and give me another 3 candle pattern, I'm gonna enter. But for now, this is my stop loss here, and what I could target it is 15-minute level or this 1 minute level, for example, right? 3 to 1. You see, we started going lower, very close to that level, and taking it and keep going lower. I could have looked at 15 minutes, the levels that we have. Actually, this is a very significant level, low fair value gap below. Could have targeted this one, but 3 to 1 is more than enough, but it could have gone to 5 to 1 or maybe more, right? So this is how we execute the lower time frame. This is only one way of executing it. Feel free to create your own way, follow your own way, mix this. It doesn't mean that you use it as a whole strategy. You could have used it as a confluence, use it as a POI, however you feel. This is the end of the video. I hope you guys learned something new today. I hope that I went in enough details, and if you have any questions, ask in the comments and I'll do my best to get back to you. Make sure to share this video with your friends, like and give a comment. This is Mulham, and I'll see you in the next video.